Just going to break it down for the basics here. The basics are price is the advertising mechanism. Volume at price measures the success or the failure of that auction. Don't look for patterns. Don't look for setups. Don't look for like specifically lower highs and higher lows, etc. Those are things that we typically label the market as, like it's making a higher low, a lower high, etc. Double top, triple top, head and shoulders, whatever. Those chart patterns we look at, like above value and below value. We've got the stages. Those are contextual metaphors that we use to help put the market into context. But however, the underlying concept that you always use in order to be in tune with the market and what it's telling you, and actually be in tune with the auction process, is to look at price as the advertising mechanism, and then look at the volume profile, whether that's a composite profile, whether it's an intraday profile like this, whether it's a value profile. All of those profiles show you from different perspectives. As a composite profile shows you from a much longer term perspective, because it goes back months, at least years sometimes. The valuer, custom valuer, shows you the acceptance in terms of where value is. So we've perceived value basically because of a sideways price action. Whereas the intraday profile show you acceptance and rejection intraday. So that's telling you what the market is rejecting and accepting intraday. Now that bit of information of intraday acceptance rejection needs to be used within the context of the bigger picture. So let me break it down quite simply. Like, let's say, for example, you have the ES right now. Let's just say the ES in itself, okay, without the confluence. Now we take it a step further with the trading framework by using confluence. But here, we firstly need to understand, okay, the context is a potential stage 3, but we might go straight into stage 4. Okay, now when we look at the value profile, that shows us where value is and where the main level of acceptance is since the 7th of August. But you look at the composite profile, that goes back even further, which actually goes back to the 24th of June 2013. Probably don't need it to go back that far, but I haven't changed it. But now that shows me where acceptance and rejection is for the longer term. So now what you're doing is really putting this value here into the context of the composite profile on the right. So as I was saying earlier, just use this all within context. So when you look at the bigger picture, the shorter term picture, use it all within the context of the bigger picture. So when you look at the intraday picture here for the Nasdaq, for example, yes, whilst we might be looking at a longer term low volume area just above us here, but at the same time we need to understand that short term intraday we've actually got a fairly decent distribution of acceptance. Remember, acceptance, rejection. So price advertising here in this range, what has it done since it started advertising this range? It's accepting it. So where did it accept lower? What would give us an indication that it's trying to move lower? Well, if it keeps accepting within the same area as yesterday and the same area here, it's not in any shape or form telling us, okay, we're happy to move lower. So it would actually need to trade down here at least. So that's just logical application of the basic concept of auction market theory, right? So people get stuck with this because they don't break it down to the basics. They're not listening to what the market's saying. So look at the now you look at the ES, for example. Okay, we've got the bigger picture, which I've just discussed. Okay, in the last portion of this video. You've got the bigger picture, you've got the composite profile, you've got the value profile. But yes, whilst we expect from the bigger picture 85, 84.5 may hold for push to 77.5 and then 74.5 the VPOL. What is it telling us shorter term? Yeah, well, we had some acceptance here higher. Okay, so we had acceptance in this range and then this range yesterday. Now what the market has done overnight, well, we accepted here, but now we're accepting lower. So this is already good on the ES because it's still proving to us that it actually wants to move lower. Okay, so notice how I put it together. Okay, but not just putting it together for the ES, putting it together for the YM, the Nasdaq, and the ES together. So these three products work very well together. It gives you high probability setups. So some people might say that's too picky, but in my opinion, that's what you need these days. You want to get rid of as much noise as possible, so you're not just taking trades that pretty much are useless in the end, just stacking up commissions. You want grade A opportunities, trades that are worthwhile taking.